Good morning, traders. Today is Monday, the 17th of May. My name is Neville Hornsey, market analyst with You Trading, and today I'm joined by
Joel Frank, also market analyst for You Trading.
How are you doing?
I'm all right. How are you doing, Nev?
Yeah, very good, very good. Just obviously talking about the markets and looking forward to hearing your views on the fundamentals that happened last week.
Like a lot of interesting stuff's been going on, definitely.
What was your biggest takeaway from last week, do you think?
God, I haven't really thought about putting it into one takeaway. I mean, I guess the biggest one is, inflation is the hot topic, isn't it, at the minute? Yeah. Inflation concerns were pretty much raging for the entire week because you had, at the start of the week, you had commodities like raw material prices, like, iron ore, copper, other stuff as well, surging, and then inflation break-even surging as well. And then on Wednesday, those fears were not confirmed because, we're expecting inflation to be really high because of weak base effects from last year. So we're expecting the year-on-year rate of inflation to be really high. But yeah, CPI in the US, headline CPI, 4.2% year-on-year. But more concerning, 0.8% month-on-month for the headline CPI, which suggests that the price pressures, it's not just weak base effects from last year, they're actually building right now. Obviously, some of that was to do with reopening, like some of the sectors that get boosted by either stimulus, like with the stimulus checks, or reopening in the US. So it's not going to stay that high, but it could be persistently higher than what people, especially the Fed, have been thinking. So yeah. Just all about inflation now. What's going to happen with inflation?
No, definitely. And from what I could gather, the commodities did sort of peak out and then start like pulling, off their highs a little bit.
Yeah. China's been taking a bit of action to ease the surge in like iron ore prices and steel prices and stuff. So that might, if that does cause like a 20% correction in these various different commodity markets, that should ease some inflation concerns going forward, which I guess is probably going to be constructive for risk appetite, probably not good for the dollar. But still, these inflation concerns, they're going to be around for a while, for a long time, I think.
And I think, if there is all this stimulus still coming down the pipeline and China's still going to do stimulus and they require infrastructure, then from what I can gather, again, like the copper mines themselves are still behind on the supply. So if there's still great demand, then copper will definitely be rising in the future. The iron ore, that was, I wasn't expecting that because that's Australia's kind of biggest thing to export to China at the moment. Because like you say, China and Australia aren't having a great time with it politically. So exports are down overall, but in all the other markets, but iron ore. So
well, the thing is, China doesn't really have any properly viable alternatives to Australian iron ore. Like there are a few other places they can get it. I think like some of those Southeast Asian countries have got decent supply, but really Australia, they need to keep buying Australian iron ore. Like they just need to. If they stop buying Australian iron ore, the price of the iron ore that they do buy is just going to go through the roof. Yeah. So
But like
money talks.
With the dollar index, obviously coming off as well, then that's obviously good for commodities. So we should probably have a quick look at that. Yeah,
start with the dollar. I like it.
So on here, I've added the 20 period moving average on the daily now, the dash one. So
nice.
The 50 and the 200 are obviously separating, diverging away from each other. Have been for ages. So that correction back up to the 200 and the balance area from that August to November period back in 2020, that was the resistance. But the long-term momentum is to the downside. So I put the 20 on now because the 20 and the 50 seem to be where it's at in terms of technicals.
In terms of resistance.
I guess it's the speed element, isn't it? So if the 20 is moving away from the 50, then but the price action itself shows you that the down swings are increasing in their sort of volatility. But just the fact that the price can't get back above the 20 since end of April, that will be the first sign of a a reversal if it can actually get back up on the 20, but
Yeah,
doesn't look like it's going to happen for a while. So I still think we're going to take out these swing lows from February and January. So we shall see.
Yeah. I mean, definitely this week, I think that the prospect for us to break below 90 in the Dixie is there, because it's like we haven't really got that much this week in terms of like US economic events. Like we've got the main thing is FOMC minutes, but they're already out of date because since the last Fed meeting, we've had that weak NFP and now this really hot CPI. So it's kind of like they're irrelevant at this point. Although, I mean, there is some Fed speak that's going to be worth listening to, but I think, if appetite for risk in the market can remain constructive because perhaps these Fed speakers are dovish and inflation concerns die down, well, then that's not going to be good for the dollar just because of its kind of safe haven appeal. So, I think there's definitely room for more dollar weakness this week towards the targets you're talking about.
Yeah, with regards to the Fed, then you've obviously got dual mandate, but mainly sort of focusing on the jobs, aren't they? So they're saying that they want jobs, and that's just not happening. And then with the retail, like consumer sort of sentiment and sales just dropping, if the stimulus checks aren't going to be forthcoming in the future, then it seems that the retail consumer, if you like, isn't overly confident that they're going to spend more money in the future. They're going to keep saving and paying off credit cards and doing what they can to stay afloat for the future. So
because I think like you say, the stimulus has stopped, so the pace of consumer spending is probably peaked for now. Doesn't mean that it's going to be weak going forward, but I think ultimately the outlook for the consumer in the US probably kind of relies on what happens with the jobs market. Like, if the jobs market does improve really quickly, consumers are going to be feeling confident. But if not, then it could get a bit ropey.
Yeah. And I think, like, just going back to the March PMI, like ISM PMI and things like that, I think March was kind of a turning point. And then obviously now we've got sentiment across different states where they say that they feel that the stimulus has prevented people from willingly looking for work or accepting work. So there's definitely, I think March was probably peak everything, like peak retail, peak spending your stimulus check. And now if the states are sort of saying that they wish to maybe stop that, regardless of what the federal government want to do, then it would be interesting to see how this goes. But technically, and I think sentiment and momentum shows dollar down. So good for oil, because the 50 held back in that consolidation period. Now I think we just need to keep an eye on the 20. So this dashed blue line, just in terms of momentum. Obviously fundamentals. How do you see the fundamentals on oil at the moment?
I mean, we see not too much change, to be honest. Like the thing for oil is it's still being held back because India's still looking not great. There's concerns in other Asia. I don't know if you saw, but it's a little bit risk off this morning because the coronavirus situation in other Asian countries has been getting worse, like Taiwan, Singapore, other Asian countries. So the outlook for demand in Asia is not looking great. Also, Japan just did some new state of emergencies and some new
have they gone into regions full lockdown? Or
no. But I think most of their economy now is under state of emergency. Yeah. In terms of like where the economic activity happens. Yeah. Which is, I mean, that in itself, I think that what that means varies from area to area, but still it's not good. So yeah, demand outlook in Asia is not great, and that's holding crude back. But the demand outlook in Europe and North America is pretty good, and that's been supporting oil. So yeah, I think we just need more clarity. I think we just need to see globally the pandemic situation improve, and then oil can resume its upwards trajectory. That's the main thing right now, I see.
Yeah, I think technically higher highs, higher lows, momentum, moving averages stacked in the sort of bullish sort of manner. It would take some sort of shock now to undo all of that. And I guess gold is signaling a weaker dollar rather than a weaker outlook. As far as I can work out, people are moving in to gold as that sort of store of wealth rather than that sort of fear of the world coming to an end. So
yeah. Well, also inflation. If
mm,
inflation, like people are talking about inflation, if inflation fears are picking up, like you say, people want an asset which is a hedge against inflation, that's a store of wealth, and gold is kind of seen as the ultimate like hedge against inflation. I mean, in truth, there's a lot of hedges against inflation. I mean, other commodities are
yeah.
good hedge against inflation. Stocks are actually, I mean, can be a good hedge against inflation, because if prices go up, they just up their prices and their earnings go up.
Yeah, exactly. If you can get like, I don't know, a 10% yield on a stock. I mean, if you go on the meme stocks like the Reddit, then you're looking at like 50%. It's just like, you know, like
That's
1,000%.
isn't it?
Yeah. So like, yeah, you're gonna beat inflation every day. But
Yeah.
for the sort of money managers, like, you know, they need to like be more on it, don't they? So
Yeah. But yeah, as inflation fears pick up, people basically don't want bonds as much. They want, because bonds get eaten into by inflation, their value. They'd rather something like gold, or yeah, because it's such a liquid asset. So
I was just thinking on another sort of chart that I did for gold. I did it on a weekly, and if you take like just the weekly closes, you know, you know, the weekly close last week was immense in terms of just sort of the momentum. So it's it's good on the old daily and the extremes of the candles, but on the weekly, this price action of higher highs and higher lows is definitely looking strong. And I did it on Bitcoin as well. So if you do like a weekly close on the Bitcoin, you can see that like the last week of Bitcoin definitely the structural bearishness. So maybe there's money moving out of the sort of, you know, the digital gold into the actual real gold. So
maybe. I mean, Elon Musk didn't help, because he's been the main story for Bitcoin, hasn't he?
Yeah, that Bitcoin Elon Musk thing, like, you know, people are saying like Bitcoin is not Elon Musk is not Bitcoin. But there's obviously, if you know that companies like Tesla are accepting Bitcoin, then that just enhances the take up of Bitcoin. That no one's mentioning it's like the tax credits that he sells, you know, in terms of Tesla's revenues of credit selling. What's the word? I think it's like an environmental sort of tax credit.
Oh yeah.
You know, Tesla makes billions selling those credits.
Yeah.
And I'd imagine if you've got the story of Bitcoin being environmentally unfriendly, just the amount of energy it uses, it kind of makes your Tesla electric car company less ESG friendly.
Yeah, exactly. I mean, this is the problem with Bitcoin, like, because I know a lot of people talk about, oh, but Bitcoin's going to be powered by renewable energy. But the fact of the matter is, to sell one Bitcoin or to buy one Bitcoin, like that, the amount of energy that's used in that transaction, just one Bitcoin to another Bitcoin wallet, I think it was the same as like the average household's electrical energy usage in like more than a year. So it costs, really, I know. So even if that comes from renewable energy, it's still, that's a lot of energy, man. That's such a waste.
So is that
what
like
a waste?
One Bitcoin or a part of a Bitcoin, like in terms of like one whole transaction of one Bitcoin?
One whole transaction of one Bitcoin was something ridiculous, like a household's energy consumption for an entire year.
Jeez.
So that's the thing. Like, I know it's all about this. I mean, I'm not an expert on these cryptocurrencies. It's all about proof of work, where you have to make sure that it's not being double spent, and that's how you get the whole security of the whole system. But I'm sure there's a way to have a secure cryptocurrency without using that much energy.
Yeah.
And if there is a way, and I'm sure there's thousands of cryptocurrencies, and then maybe Bitcoin isn't going to be the one. I mean, I don't think it is. There's too many better alternatives, probably. Or there's probably going to be.
I mean, I'm on a couple of WhatsApp groups and things, and just the amount of DeFi sort of coins and tokens, and you know, everything that you can think of as being a hot money sort of stock play. You know, there's just obviously Bitcoin is the number one, but there's so many alternatives, you know, that are trying to take market share. But I think the big story is the sort of environmentally sort of friendly nature of everything. You know, if you talk about gold extraction out of the earth or copper mining, you know, anything to do with mining has to now have some sort of element of carbon zero reducing elements.
But the thing is, there's a lot of gold that's already been extracted, and once it's been extracted, it is carbon neutral. You know what I mean?
Yeah.
So whereas obviously Bitcoin to continue to maintain the network requires continual.
Yeah, and and I guess a lot of the energy they say, it's going to come from geothermal stuff out of Iceland or something like that. Great, but what about all of the stuff out of China or this, you know, where it's coal factories predominantly?
What about putting that energy to something more constructive for society? You know what I mean? Like, I'm sure there are emerging countries that could be donated that energy, and then they could put it towards powering schools or something. Do you know what I mean?
Yeah, exactly.
Or powering hospitals.
Yeah, no, definitely. All right, so that's
anyway. We're getting sidetracked.
Yeah, main commodities, dollar. I'm going to mention this because I mentioned it just before we started talking properly. Last week's weekly candle on the S&P. If you go to a technical analyst book, analytical book, it will say that the hanging man is a bearish candle, especially at the top of such a mad run like we've had. So that's weekly concerns. And as we were talking about last week, just the amount of run up in terms of green weekly candles, we were due one red candle at least. So maybe we're due a few more. But the 20, the 50, the 200 weekly is the same as the daily. They're all looking bullish. And I would find it very hard to short the S&P at this level at the moment.
Yeah, I mean, just shorting the S&P is just not. It just wouldn't have been my strategy for. I think the only time that it would have been my strategy was when. Do you remember when everyone thought the world was going to end and everyone was going into lockdown back here on in the beginning of March and end of February? Yeah. Obviously, that was like, oh my God, get short. But aside from that,
the thing is, you couldn't like in the futures market, it was just dropping, you know, down to limit downs and you know, it was almost impossible to get a trade, like in terms of trade location, to get a good trade on, unless you were. I mean, I have to admit, I was long the DAX around, beginning of February, and I thought, okay, I'll keep buying it until it's basically the same pattern as what we're looking at on the S&P here. I thought I'd buy it at that sort of swing low from the previous swing low, and it just tanked and then wiped out a load of money. So I just thought, no, it's just, it's hard to believe that it's going to, well, you don't know it's going to do a 30% correction, do you? You just think 5%, 7% maybe, good, decent pullback into the 20 period moving average, 50 moving average, whatever. But no, to get trade location, a decent one with it limit down was almost impossible.
It's such hard trading conditions back then, wasn't it?
Yeah.
It was just,
and obviously
insane.
The fear of, is this going back, not to zero, obviously, but further, you just, who knows? Until the Fed comes in and says, no, we're going to backstop with trillions of dollars. In hindsight, again, like 2009, 2020, I just need like the world to come to an end and then wait for that Fed announcement. And then I'm all in. And that'd be the time they say,
yeah, especially if you get, because it wasn't just the Fed, it was the government with massive stimulus and the Fed. So once the government and the Fed come to save the day, that's when you got to buy.
Exactly. But next time the market just to say no, we don't believe it because it didn't really work last time. But obviously it does. But so going back to the daily, like earnings, most of the S&P 500 earnings, I believe, beat expectations. So I think it's a buy. It's retraced quite a lot of that sort of correction. So we closed above the 61.8. So in my mind, that indicates with the momentum, with the general sort of consensus of 500 companies doing pretty well, we get to all-time highs relatively soon, in my mind.
Yeah. I mean, I think the biggest threat right now is the same thing we've been talking about for a couple of weeks, just a bit of profit taking with stocks at elevated levels. But aside from that, there's not really a huge amount I think that could trigger like a massive drop in the next couple of weeks.
Yeah.
I mean, I think the biggest threat right now is we've been talking about inflation. Potentially, if inflation is too high and the Fed has to deviate from its ultra dovish position. But is that going to happen? I think most people still think that's probably not going to happen. So,
yeah. And I guess the tech industry are the ones with the highest earnings. So the highest potential to lose part of those earnings in the future.
Or the highest future earnings growth, like priced into there. Yeah.
But I think I mean, I don't know about anybody else, but the NASDAQ for me is just trading, like the technical traders are in control at the moment. We had this run up. So you had like a wave up, sort of sideways correction, a bigger sort of impulsive move to the all-time highs. And then we've had quite a controlled correction back down to the original consolidation. It is like to the tick, the 61.8% retracement. So I know Fibonacci's are probably self-fulfilling prophecies and stuff, but it worked. We had the double bottom back here from beginning of May. Obviously that weekly daily candle closing below that was the bearish signal. We were going to go lower. But if we can get above the 50 and then above the 20-day moving average, then I think a lot more people will buy into this. Obviously can't go long at the moment because it's in a downtrend in terms of recent market structure.
Yeah.
So
I mean, the one thing I would say with the NASDAQ is like a lot of people are expecting at some point US government bond yields are going to move higher, and that tends to be bearish for the NASDAQ. But it's not necessarily bearish. It's just bearish if bond yields rise really quickly. As long as they gradually rise over time, then you can kind of see this price action that we've seen in the last couple of months. Like you get a bit of pressure when the yields rise, but then you recover it. And then, you just continue grinding higher. Yeah. I think that's probably most likely to continue.
Yeah. And I think like over the next few days, what I would like to see is backfill the price action from Friday, Thursday. So fill in that green stuff here. And then, on the next rise, then we've got like a high, a higher low. And then, that's what I would like to see.
Yeah.
Unless you were holding your nose and buying the 61.8 in the middle of this consolidation period, if people obviously did buy there, so that's great. But for the momentum traders, we're gonna have to wait for a pullback and then, a retest and goes. So overall feeling bullish, momentum still bullish, technically not quite at the moment. Unless you've got a decent trade location down to 12,900.
Fair enough.
Yeah. Currencies, just quickly talking about pullbacks and, retests and continuations. The euro, obviously with the weaker dollar, broke out, came back down, retested, and then looks very likely to continue higher.
Yeah.
So that's good. Weekly cable. Again, in terms of breakout and retests, I'm waiting for a breakout of the 2018 highs. So that looks pretty much on the card still. I think the UK is doing quite well in terms of political sort of certainties.
Yeah.
The only
reopening again today. We've got lockdown being eased even more, literally from today.
Only concern would be the Indian variant COVID. But then they're trying to snuff that out quite quickly, aren't they? There's like a big move to try and test the areas that are affected rapidly.
And also, I think the key thing with the Indian variant is, there's two key things. Like the vaccines seem to work fine against it, and all of not all, but most of the most vulnerable people in this country have now been vaccinated. So that tells me, fingers crossed, that even if this Indian variant does spread quite a lot amongst young people, it is unlikely to cause like a massive spike in hospitalizations and deaths because, fingers crossed, I don't want to jinx it. But it's like the people that are most likely to die of coronavirus are now as protected as they could be.
Yeah, I think I read a stat.
I think it'll be all right.
Yeah, I think I read a stat that first time in 14 months, whatever, less than 10,000 people have died, maybe globally, like yesterday or something. Something happened yesterday where it was like,
really,
even
with all the deaths in India.
I mean, I'm gonna have to like try and go back on that, but I'm definitely gonna go and check it because I'm gonna write about it later if it's true. But yeah,
I mean, deaths are at their lowest in a lot of the developed countries as they have been in a very long time. So that's a big thing, I guess.
The headline might have been just for America, but in terms of like England, we've been like squashing that curve for a long time now, haven't we? So it'd be, if we, I mean, I don't know what gets us above the 2018 highs and stuff, but I'm hoping that there's some good news down the pipe very soon. Dollar yen, I don't know what's going on with this. It's just dead. Just like, I mean,
yeah. Dollar yen, I think one of the things that's making it difficult with dollar yen and making it just a range play at the minute is because like the broad theme of markets in the last couple of weeks has been like a combination of risk appetite and dollar weakness, which obviously dollar weakness is bullish, it is bearish for dollar yen, but then risk appetite is bullish for dollar yen. So it's like the two kind of things are cancelling each other out. You know what I mean?
And they certainly have. So, but the biggest candle recently was this big green one. So maybe we're just retracing into that and then backfill down to the 108.50s and then go higher again.
I think that makes sense for dollar yen.
Yeah, but I guess we just keep an eye on the dollar index itself. But I think that's kind of the majors, isn't it, in terms of what we normally talk about? Yeah. Anything else you want to add in, or do you think that's it?
I think that's it, to be honest. Like we already kind of talked about the week ahead. There's not really too much in the US apart from FOMC minutes, which are outdated, like we were saying. So, yeah.
Cool.
Be a bit of a quieter week, I think.
Yeah. All right. Well, great talking to you again, obviously. And I look forward to talking, mate. Next week. I think it's next week. So,
yeah.
We haven't got like a bank holiday, have we?
I think that's, is that the week after or 2 weeks after?
All right, cool.
We've got
All right, excellent. All right, I'll talk to you next week then.
Nice one, mate. Bye.
All right, take care. Bye.